This past Monday morning, a single announcement sent shockwaves through the financial world, shaking monetary confidence across the West. Federal Reserve Chairman Jerome Powell confirmed he is now under a formal criminal investigation. The probe centers on his testimony regarding the staggering $2.5 billion renovation of the Fed's headquarters. At the heart of the matter are major discrepancies between Powell's public statements and internal documents, which suggest motivations far different from what Congress was told. Within hours of the news breaking, the price of silver skyrocketed, blasting past $90 per ounce for the very first time in recorded history. This isn't just some routine inquiry. Federal prosecutors are digging deep, examining whether Powell deliberately misled Congress about the true scope and necessity of the renovation. The $2.5 billion price tag was initially justified as a critical modernization of infrastructure. However, it seems to have included extravagant elements that raise serious questions about fiscal responsibility. Leaked internal emails reveal discussions about so-called legacy projects, details that were never disclosed to congressional oversight committees. Back in September of 2025, during his testimony, Powell characterized the renovation as a purely functional upgrade, focusing on essentials like electrical systems and security enhancements. But the investigation is painting a very different picture. Invoices from contractors show a surprising taste for luxury materials and architectural features that go far beyond basic infrastructure needs. We're talking about a $47 million marble facade, $12 million designer lighting fixtures, and a state-of-the-art $23 million conference center. These expenses suggest priorities that were never communicated to those in charge of oversight. Perhaps the most damaging revelation is a $180 million underground complex, cryptically described in documents as a continuity facility. To many, this sounds less like a functional workspace and more like a luxury bunker. What makes this so explosive is that all this spending was happening while the Fed was publicly preaching fiscal restraint to other government agencies. Chairman Powell himself repeatedly emphasized the need for spending discipline, warning that excessive expenditures could fuel inflation. This glaring contradiction has created a massive credibility crisis that extends far beyond a typical Washington scandal. The markets interpreted the investigation not just as a problem with one person, but as evidence of systemic rot within the very institution tasked with maintaining the stability of the US dollar. Silver's dramatic response is a clear reflection of these deep-seated concerns about the central bank's independence and integrity. The precious metals surged an incredible 14.7% in just 6 hours, triggering multiple trading halts. Gold wasn't far behind, reaching $4,627 an ounce and shattering resistance levels that analysts had predicted would hold until late 2026. This synchronized movement in precious metals suggests that major investors are strategically positioning themselves for significant systemic disruption. In contrast, the dollar index plummeted, hitting its lowest level since the 2008 financial crisis. The timing of this scandal couldn't be worse for the Fed's credibility. Powell is scheduled to testify before Congress next month about monetary policy, likely defending the decision to keep interest rates elevated despite growing economic pressures. Now, this investigation completely undermines his authority to speak on fiscal responsibility. Predictably, the political lines have been drawn. Republicans are loudly calling for his immediate resignation, while Democrats are rushing to defend the institution itself. This political pressure threatens to transform a criminal investigation into a full-blown referendum on the Federal Reserve's independence. The international reaction highlights the global implications of this crisis. In an unprecedented move, the governors of 12 foreign central banks issued a joint statement expressing solidarity with Powell and the Federal Reserve. While the statement was an attempt to maintain confidence, it also acknowledged the need for greater transparency. The very fact that such a statement was necessary suggests that international faith in America as monetary institutions has been severely shaken. Behind the diplomatic language, currency markets voted with ruthless efficiency. The euro gained 2.3% against the dollar as European investors began to reassess the safety of their dollar-denominated assets. The Swiss franc, a traditional safe haven currency, also strengthened significantly. Most importantly, central banks in emerging markets are now accelerating their diversification away from US dollar reserves. This is a trend that was already underway, but it has intensified dramatically since the investigation became public. This isn't just about a political scandal. It threatens the dollar's long-held status as the world's primary reserve currency. The silver market's reaction is particularly telling. It transcends the normal dynamics of precious metals. While industrial demand for silver has been growing steadily thanks to its crucial role in solar panels, electric vehicles, and electronics, the current price surge is being driven by investment demand. This demand is fueled by monetary uncertainty, not by simple supply constraints. Silver ETFs have seen record inflows as institutional investors scramble to find alternatives to dollar-based assets. The The premium for physical silver over paper contracts has widened to levels not seen since the market disruptions of early 2020. Supply dynamics are only compounding this atmosphere of crisis. China's export controls on silver, which went into effect in December 2025, were already constraining global availability. Now, with American monetary credibility facing its most serious challenge in decades, this restricted supply is colliding with surging investment demand. This creates a perfect storm for extreme volatility, potentially destabilizing critical industrial supply chains. Major tech companies, from Apple to Samsung, are now scrambling to secure long-term contracts before prices spiral completely out of control. The likely timeline for this investigation suggests the crisis may only be just beginning. Federal prosecutors typically require months, if not years, to build a criminal case against a high-profile defendant, especially one involving complex financial matters. Powell's continued leadership of the Fed, while he remains under investigation, creates an unprecedented situation. Key monetary policy decisions will be coming from someone who is potentially facing criminal charges. Market participants are not expecting a quick resolution. They are positioning for a long period of uncertainty. This expectation is driving defensive positioning across all asset classes. The Fed's own communications are now adapting to this new reality. Every public statement must now undergo intense legal review to ensure nothing complicates the ongoing investigation. This necessary caution, however, limits the Fed's ability to provide clear forward guidance to the markets. This creates an information vacuum, which traders and speculators are eagerly filling with their own worst-case scenarios. The result is heightened volatility, as everyone tries to position for outcomes ranging from Powell's resignation to a complete overhaul of the Fed's leadership. The entire market structure is adapting to what appears to be a new era of permanent uncertainty about American monetary leadership. Precious metals dealers are reporting unprecedented demand for physical delivery, with waiting times for silver bars extending from days to weeks. In parallel, cryptocurrency markets are experiencing their own surge, as investors seek out alternatives to the traditional monetary system entirely. The correlation between the values of silver and Bitcoin has strengthened dramatically, suggesting that these very different asset classes are responding to the same underlying loss of confidence. The global monetary system is facing a stress test of unimaginable proportions. International trade settlements are increasingly being conducted in non-dollar currencies, as counterparties seek to minimize their exposure to American monetary instability. China's yuan and the European euro are the primary beneficiaries of this shift, while commodity-producing nations are exploring bilateral arrangements that bypass dollar-denominated pricing altogether. These are not temporary reactions to political drama. These are structural shifts in the architecture of global finance. The outcome of the investigation will determine whether this crisis is a temporary setback or fundamental transformation. If Powell is cleared of all wrongdoing, markets may eventually recover their confidence and silver prices could moderate. However, if criminal charges are filed, the resulting disruption could rapidly accelerate the shift toward a multipolar, alternative monetary system. Either scenario reveals deep vulnerabilities in the global financial system that extend far beyond any single individual. Silver's role as a monetary metal is being rediscovered by a generation of investors who had forgotten its historical significance. Unlike gold, which is primarily held by large institutions and central banks, silver remains accessible to everyday individuals seeking to protect their wealth. The current surge reflects not just institutional investment demand, but a grassroots loss of faith in paper money systems backed by institutions whose integrity is now in question. This shift toward hard assets suggests we may be at the beginning of a long-term trend, not just a short-term spike driven by headlines. The Federal Reserve faces a credibility crisis that transcends any single investigation. Its ability to ensure monetary stability depends entirely on public confidence in its independence, its competence, and its integrity. The renovation scandal undermines all three of these pillars at once, creating the conditions for an institutional crisis that could reshape our financial world. Whether the Fed can rebuild that trust while maintaining its effectiveness remains an open question, and it's a question that will be answered by the ruthless judgment of the market. Silver's message is loud and clear. When monetary authorities lose credibility, investors flee to assets that cannot be printed, debased, or politically compromised. The current surge is a vote of no confidence, and until that confidence is restored, hard assets will continue their advance, driven by the rational fear of monetary debasement and institutional failure. Thanks for watching. Be sure to follow for more updates on this developing story.